Hey everybody, this is Charles Blair, the Mad Scientist, and I want to welcome you to another edition of Guru Interviews. And I'm here with the Wealth Building CPA herself, Miss Ebere Okoye. Ebere, say hello to everybody, please.
Hi, everyone. Thank you, Charles, for inviting me. How are you doing today?
I'm doing great. I was excited, waiting for this actual meeting that we're going to have here today. I know you have a lot of information to share. You are the go-to person in the Maryland, D.C., Virginia region for real estate investors and business owners who need help when it comes to asset protection, when it comes to dealing with needs for real estate investors with taxes and so on. So I am really looking forward to hearing from you, especially during this tax season. Talk to me, girl.
Thank you. So those who don't know me, I'm a CPA and active real estate investor and the founder of the Wealth Building CPA. Of course, I own real estate across 5 states in the Eastern Coast. I've helped over 5,000 people prepare their taxes, and my greatest joy comes from helping clients, friends, and associates. I've been in the industry for so many years. So I'm very familiar with money-saving strategies that I love to implement all the time, combined with my 23 years, well, I guess now 24, we're in 2023, as a CPA tax strategist and 18 years as a real estate investor. So this combination helps me to be able to relate to the everyday investor who's trying to build wealth through real estate. That's my family, of course, married with 3 kids. Believe it or not, my baby is now 20 years old. She turned 20 last year, and she actually now owns. She bought her first investment property last year, so I'm very proud of her. She's a landlord now. So, so we're going to be looking at the 8 stages of the wealth building plan. Charles, what I've come to realize in working with investors is that people don't usually have a plan. I mean, they know they want to invest in real estate. They know that real estate is the way to go. They know that there's different kinds of strategy, but they're just like groping at it in terms of, oh, if somebody says do this, they'll do that, not really taking the time to sit down and figure out what is the plan. And so the wealth building plan is really a 12-month training program that we take every investor through on all the things that they need, that is required for them to be successful and efficient. You know, it goes into tax planning, tax preparation, entity structure, and business meetings, and the whole 9 yards. And it's not just training in terms of you're getting information. It's actually a do-it program, because we will prepare your taxes, but it's not just preparing the taxes. We talk to you about the taxes. We tell you what you need to watch out for. It's not just about teaching you about entity structure. We actually review your entity structure and restructure it if needed. We'll look at, your real estate strategy and see how it fits in with your finances and everything that you're doing overall. So we can go ahead and get started if you're ready, Charles.
So basically what this is almost like a done with you platform that you take the person from A to Z to their full financial wellness.
Exactly, because the ultimate goal of why we're all involved in real estate is to build wealth. And Charles, I know you've had a lot of people come through your doors who have an emotional attachment to real estate, but at the end of the day, they're not really building wealth, or they end up leaving the industry, or things don't work. It's because they did not implement a proper financial plan. And so these 8 stages actually were developed by other real estate investors. It's like for investors, by investors, for us, by us, FUBU. We came up with that because these are things that we came to realize over the years, that if you're going to succeed in this game, you need to have all these stages implemented every single year.
All right, let's go ahead. Show it to me.
Okay, so the first one is the financial needs analysis. What we've come to realize is that there's 15, 16 different real estate strategies out there. But people are just picking and choosing what real estate strategy they want based on what they're hearing in front of the room. They'll have this out-of-town guru come in and say, hey, you got to do commercial. And all of a sudden they want to do commercial. Or they hear somebody else say, oh, you can be an out-of-town investor. Now they want to be an out-of-town investor. But you need to have a plan. And the plan should be based on 3 factors. It should be based on how much time do you have? How much money do you have and how much experience, you have. If you don't have the right combination of these things, experience, time, and money, and you're not picking a real estate strategy that takes all these things into account, you could end up picking a strategy that would end up being toxic to you, your family, your wealth building future. So the financial needs analysis is really taking a step back and looking at what all you have. Like if you have a day job, well, maybe wholesale and might not be the thing that you want to do, or rehab and saying that I want to actively rehab. Right. Maybe buy and hold might be the way to go. Now, you might have all the time and you say, I'm going to wholesale, but you don't have any experience. You have not spoken with Charles. You don't have a coach, somebody who's going to walk you through, hey, these are all the things I need to be successful. So you have the time, you have the money, but you don't have the experience. So all these things determine what the best real estate strategy is, and to make sure that you have the right team in place before you actually launch out.
So what this sounds like to me, Ebere, is instead of you just putting on any size coat, you got a coat that is tailored fit for your structure, for your body, for your features. So it doesn't just hang off you, it fits you like a glove.
Exactly.
That's what you need it for.
Yes. And one thing I love about real estate is there's a place for everybody. That's one thing about real estate. Like in some professions, it's either you're this or you're that or you're out. But in real estate, with the 15 different strategies, the different timing of the market, you can make money in an up market, you can make money in a down market, you could be part-time, you could be full-time, you could wholesale or you could rehab, you could buy and hold or you could do notes. You can partner with others. In terms of the learning, you don't have to go to a university. You can have coaches such as Charles available. There's other people who have extreme knowledge in other areas that can come together to make this work. And that's why I tell people, do your financial needs analysis and find out which strategy fits where you are before you actually launch out.
I love it. Let's keep it going.
All right. So the next one is stage 2 focus. We look at tax planning and preparation. So during this stage, we kind of review your returns for the last 3 years. Like, do you have overlooked deductions? Do you have any inconsistencies? Do you have any audit flags? Do you have some structural things that could have been done to increase your refund? Or if you have a refund, do you have an audit flag? Not all refunds are created the same. I have somebody saying, hey, I want a $20,000 refund. But if you have a $20,000 refund that's going to have the IRS jumping up and down, your trampoline, maybe you don't want to be getting that refund. There are several ways that you can structure your taxes in such a way where you can continue to do your business. There's also unused deductions. There's wasted deductions. There's ways to mitigate your liability, way to set up a retirement account. All this we look at during tax planning and preparation. What I've noticed, Charles, I don't know if you've seen this with the people that you work with, a lot of people are interested in preparation, meeting the April 15th deadline. But really, every investor should be about tax planning, which is how do I mitigate my taxes, not just in 1 year, but for years to come. April 15th is just a compliance deadline. It really, as an investor, you really shouldn't be jumping up and down and getting all excited about getting a refund or filing your taxes. You really should be looking at your 2022 stuff should have happened last year towards year end, and planning for how you're going to prepare your taxes in such a way that you maximize all the deductions and everything that is due to you. I don't know if a lot of people know this, but the tax code was actually written to benefit real estate investors and business owners. Everybody else is just on the coattail, but that's the truth. That's why, Trump didn't pay no taxes. I don't hate what they said, don't hate the player, hate the game. Whatever he's doing, I want to be able to do the same thing. And it's doable because the tax codes have been set up that way.
So what you're saying is we need to start looking at being proactive instead of reactive.
Exactly. And see, that's why I like you, Charles. You know how to put it in the right. You can tell you're a coach. I'm just preparing.
You are doing fine. I understand you completely, and I know the information that you're dropping right now is going to be well received. So I'm not saying anything. You just keep it going.
Thank you. So let's look at the third stage. The third stage is really about entity structuring and formation. Entity structuring is about using the legal entity to provide asset protection and tax mitigation. Again, when we look at entity structuring, we look at three legs, three factors that we consider: the legal liability, the tax reduction strategy, and the ease of compliance. Every real estate strategy out there does not have the same legal implications. Like if you're a wholesaler, you're not really worried about somebody suing you because you don't have any assets. What are they going to get? Cash you done already spent in the Bahamas.
Right.
If you're a landlord and you have your cash on ground, you have an exposure. If you're a rehabber and you're only in and out 6 months. If you have good insurance protection during that 6 months, where's really the legal liability exposure? You don't have any. So when you're setting up your entity structure, you first of all have to look at what's my legal exposure? What's my tax exposure? Now, for somebody that's a landlord, you may not have that much tax exposure because if you have passive losses, if you're not a real estate professional, you may not be able to claim it. But if you're a wholesaler and you're a rehabber, here comes payroll taxes knocking on your door, 15.3%. So now we need to think of, do we need to move to an S Corp? How much salary do we need to pay you? Do we need to put aside money in a retirement account to reduce your taxable income? So you have to look at your real estate strategy and pick a structure that works that's going to take these three things into account. I hear a lot of people form an entity in Nevada, Wyoming, Mars, Jupiter, heaven. Oh, do you? But at the end of the day, Charles, as you know, by the way, thank you for representing all of us, in Annapolis. At the end of the day, it's the law of the state that's going to govern whatever is going on. Right now we're talking about wholesaling and going to jail. I don't know if you want to talk about that for a little bit, but it doesn't matter whether you have your entity in Nevada. If they say you cannot wholesale in Maryland, guess what? If you get sued, it's the laws of Maryland, no matter what Nevada is saying. So you want to have your entity set up where you are doing business. And I can't talk about this, enough, that people need to be aware of where to properly set up their entities based on the legal exposure that they have in that state.
Now, I think that's important, but I think what's even more important is working with somebody in your area who is not only doing it, but also knows the laws that's in your areas, like a Wealth Building CPA, like a Ebere Okoye. That's even more further than having somebody come in and talking to you about this. When you got somebody right here that knows what's going on right here, that will keep you out of jail.
And I'm glad you said that, Charles, because one thing that I've come to realize is I may not know all the laws, but I know to call Charles and be like, hey, for wholesalers, what's the new law? What's going on? And based on what you tell me, when I'm talking to my wholesalers, I'm like, hey, Charles said this is how it's going to impact your taxes. Have you taken that into account? And so you have industry partners who work together to make sure that you're getting the best picture, possible. All right. So the next one that we look at is common mistakes that, people make, like not having an entity. A lot of people think they have an entity, but it's actually toxic, meaning it's not going to shield you. The whole goal of setting up an entity to protect you. But if you set it up in such a way where it doesn't protect you, then it's toxic because you have this notion that you're protected, but you're not really protected. Okay. Another mistake is not understanding the two types of creditors. You may have an LLC. Yes, that limits your personal liability, but it doesn't limit the liability for the LLC. The LLC can still be sued. They can still lay claim to the assets of the LLC, and they can still have access to the equity. How do you protect your LLC, the properties that you have in an LLC? Either by doing like a friendly lien or insurance. There's so many other things that are out there. But if you don't know that there's two types of creditors and you're thinking, oh, all I need as a landlord is an LLC, then you have a toxic LLC because the LLC could still be sued.
What I'm hearing is just so powerful. And the reason why I'm saying that, Ebere, is because a lot of the new investors and even some of the experienced ones, they believe that they should have an LLC. They believe that they should have an S corp. They believe they should have this. But what the problem is, they don't know why.
Mm-hmm.
They don't know the reason why they should have this and how it works and how the pieces move together. And what you're showing us here is that it's not a puzzle that should be broken. It's a puzzle that should be put together properly.
Yep. Yep. And it's possible to do it. My experience, I worked for one of the largest real estate investors in the area, preparing his tax. Like literally, Charles, it took us a year to get his taxes done. You're talking 100 LLC partnerships.
Woo!
You're talking about 50 properties. You're talking about these. So, and I saw a lot of the things that they were implementing at that level. And I'm like, anybody could implement this, but that knowledge is not out there. And there are people who are taking advantage of people not having this knowledge and telling them, hey, you could set up like a complex trust and you can do Wyoming and then now you do the spendthrift here. At the end of the day, it really doesn't give you what you really need, which is what's happening at my back door. In my court in Baltimore, what's going to happen if somebody takes me to court? You can talk about Nevada charging order all you want. You want to know when you're getting sued because guess what? As the defendant, you don't show up, guess who they're going to rule for? The plaintiff. So why would you say, oh, they can't sue, they can't serve you? You want to be served. Okay, let me get... This happens a lot. I see this a lot. So I want people to be aware and know exactly what's going on. So moving on to the next stage, business registration and bookkeeping. It's not just enough that we set up the entity. It needs to be registered the right way. Like you want to make sure you get your articles of organization ready. Oh my God, Charles, I cannot talk about this enough. People set up their entities on SDAT. They're using their home address. They're using themselves as the resident agent. They are signing their name on the filing party return information. How have you protected yourself by now putting everything out there that is public information? In this day and age of Google Maps, I can see your grandmother sitting in your front yard, and that is your address, and I can look for who owns that address, and I can tell it's you. You really have not protected yourself because you did not set up the entity right with the state. And there's many forms and things that, God bless Al Ayala, so we use his operating agreement and the way that he sets to set up entities because it thoroughly protects you, not just from creditors, but also if you have to go to tax court, so making sure that all these things are properly set up with your business registration is not just about the entity structure, but you also have to make sure that it's set up properly.
So in other words, you're just saying, don't make yourself a target. Get that target off your back and try to at least keep what you have without it being taken away from you.
Yes, because it doesn't make sense to go through all this length and one little mistake, which is the whole goal of asset protection, is you don't want your tenant, that crazy tenant, to know that you own the property. But if you put your name on there, your address and all of that, because you should be representing yourself to your tenant as the property manager, they should never know that you are.
Ebere, you are preaching it right now because I can't tell how many investors want to use that vanity plate. I own this property.
Nobody cares. Yeah. Control, what do they say? Own nothing, control everything. So nobody needs to know what you own. Keep all that stuff away from predators that are going to sue you, So, so moving on to the next stage, the business analysis meetings. What we found out, Charles, is that most investors, I'll say about 85, 90% of investors are solopreneurs. They're just working on their own. They do their own thing. That's how America is built, the mom and pop shop. Small businesses are the lifeblood of this country. But that has its advantages because you're able to react quickly. You're very responsive. You know that if, the Bible says you don't work, you don't eat. So you're going to be out there, you're going to be hustling. However, you need counsel. You need to work with others. You need other people, that can come together and do an advice. So we help you form what we call an alternative board. If I have to send you to Charles and say, no, you need to get some coaching done. You need to know what the rules are about wholesaling. If I have to send you to a real estate attorney, I'll say, hey, reach out to this attorney. This is what, if I need to send you to an estate planner, if I need to send you to somebody who handles cost segregation, we handle cost segregation, but there's some that we can handle for commercial. I'm not, we're not one of those CPAs that say, oh, we can do it all and try. No, there's enough business to go around. So we bring together this team to help you get crystal clear on how your business is doing and what you need to do. Do you need a bookkeeper? Maybe that shoebox receipts is not working anymore, and you need a full-fledged bookkeeper. Maybe you need a tax attorney. There's only but so much I can do. Maybe I need to refer you to somebody who handles strictly tax resolutions. So bringing together this team for your benefit is what we do during this business analysis meetings. We usually do it May, June, and it's a requirement for everybody in the Wealth Building Plan to sign up for a 1-hour meeting with me to really see how your business is doing and what else we can do to take it to the next level.
Gotcha.
The next one is investment property purchasing. I don't have to spend time on that because, Charles, I know that you guys do an awesome job helping people with the different real estate strategies. The role that we play is helping you with the analysis. We can also help with funding, because what happens is, because 95% of my clients are real estate investors, there's always somebody looking to purchase a property. I can't tell you how many times I've thought, oh, maybe nobody will be interested. Let's just send a blast. We send a blast and all of a sudden somebody is interested, in the property. So for those in the Wealth Building Program, we allow you to send a blast to our client list, and people are very helpful. Or if you have any question, if you say, hey, I need to hire an admin assistant, I'll send something out, because we're a community. We come together to help out. Like last week, we had two of our clients who came and gave very good information about how to get into commercial investing. They're not coaches, but these are people that I see are doing very well, So in terms of investment property purchasing, it's helping you make those right connections so you can make the right decision about what to purchase and when to purchase.
Excellent.
And then the next one is stage 7, which is retirement planning. That's one of the things I really love about real estate. You're able to put so much money away into a retirement account. So we talk you through whether you're going to set up a self-directed IRA, a 401k, a trust, all of those things. But we favor the solo 401k over and above the self-directed IRA, because with the self-directed IRA, you have to work with a custodian. They got to approve everything. They charge you money, percentage of what's in the account. But the solo 401k is really self-directed. You don't need a trustee. You can make contributions to it up to $63,000 a year, both the profit sharing piece and the salary deferral piece. The salary deferral piece is just like you have at your regular job. You can contribute up to $20,500 or $27,000 if you're over 50, plus 25% of what you made in net income. And then if you make over $200,000, we could be able to set up a defined benefit plan where you can put away up to $120,000. So, Charles, what a lot of our clients have done, and like Nate Joy and all these people, what they've done is you set up your retirement account, put in a lot of money there from the money that you're making from real estate, let it grow, and then start investing in real estate from that. That becomes the sweet spot, because now you're taking away all that tax-free money and using it to build your wealth. So we walk you through the best retirement plan. And that's another thing that I love. There are several strategies. Like my landlord people, what we do is, okay, maybe you're not able to claim the passive activity losses, but can we pay you a management fee from the work that you do for your property? Because that management fee now becomes earned income, which qualifies you to contribute to the solo K, plan. So we assist with all of that. And, a good chunk of it needs to be done by year end. And one of the things I like about the solo 401k, you can borrow up to $50,000 or 50% of the value of the account. You have up till tax filing deadline, including extensions. It's not like the IRA. Well, not like the SEP IRA, you can also do including extensions, but not the regular IRA. So it's possible for you to make all this money in 2022, and you have till September, October of 2023 to make your contribution. Isn't that sweet? By the time you don't finish using that money and doubled your money, then you're like, Uncle Sam, here you go. But you have already used that money over. It's like a be your own bank.
Exactly. So actually what you've done was to take it, reinvest it, flipped it, and put it back in.
Exactly. And now give it to Uncle Sam. So I don't know why people are excited about getting refunds April 15th. You gave Uncle Sam interest-free, zero interest money for 12 months. And you're happy about it. Charles, who did this to us?
I love it. I love it. Keep it going.
All right. So the last one is the stage 8, which is the year-end tax planning. I tell people April 15th is your tax filing deadline, but December 31st is your tax savings deadline. As an investor, you really should be worried about December 31st, your tax savings deadline. April 15th, you're just reporting. You're struggling with everybody else, scrambling to get all your documents in to CPAs who are tired, who are spending 12, 14-hour days. You best believe that you are not going to get the best out of them if you're trying to do tax planning during tax preparation. The best people that benefit from having a CPA such as myself are those who do their year-end tax planning. November, December, we're sending emails. We're looking at all this stuff. We're coming up with strategies. And guess what? You can now even comfortably file an extension where we don't have to deal with you until the summer or late October rather than scrambling for the deadline because you're not sure what you're going to owe. So year-end tax planning is very important. November, December, you should be taking a look at everything that happened for the year, sitting with your accountants and looking and seeing what do I need to do before December 31st so that one, I can reduce my tax liability, increase my refund, or put more money away into my retirement account. And those are the 8 stages of the wealth building program that I want people to be aware of. I'm not going to go through some of these. These are things that we usually covered when we get to the year end, and I know Charles will be talking then. But I just wanted everybody to be aware of these things. So that's it.
Well, here's my question. You left something wide open. One, how can someone get with you to be that person to help them set up this wealth building plan?
So one of the things that they can do is to call us and set up an initial consultation. Nobody does free consultations with me. If you want a free consultation, it's with my business development specialist. We're growing and we have a lot of people that we're serving. Right. So you would work with our business development specialist to first of all, make sure, are we a fit? Can we help you? Can we assist you? Once that happens, then you now schedule a paid consultation with me. And whatever you pay for is credited to whatever service that you ultimately need.
And I'm going to approach you, Barry, because you're not just saying one size fit all. You're screening them, you're determining where they fit at, and then you're giving them that specific plan for that process.
Exactly, because what we've come to realize in real estate is just like an attorney always says, it depends. Really, when it comes to real estate investor, it depends. You can have people who are implementing the same exact strategy, make the same exact money, but their situation is completely different. And you have to tailor it and personalize it for what they need, not based on what they heard in the room. How are we applying it to you so that what you're hearing becomes relevant to you personally?
So I want you guys to look at that number. It's on the screen, 1-888-502-3767. That's 1-888-502-3767. You also have the actual web address, and you also have our actual information where you can reach out to Ebere, jump on there, get online, do what you need to do, because Uncle Sam ain't playing. Uncle Sam is not playing. You ain't Donald Trump. So don't think you can get away with it.
Absolutely right. But it is one thing I know is that there's no need for tax evasion. There's so many loopholes that are available that if you were to do it right, it's not just even about tax savings. It's really about wealth building. I'm actually glad that you brought that up, because there's some people where we're not able to help you reduce your taxes because 95% of what you earn is from a regular job. You don't have a business. And even when you do have real estate, it's subject to passive activity losses. But what I tell people at the end of the day is your wealth base growing. So while you may pay a little bit more than a regular business owner, or sometimes somebody who's a full-time real estate professional, if you have a property that's growing in appreciation, and then you have the benefit of the principal reduction, you have the benefit of the yearly cash flow, you're putting aside money to the retirement account, you're not spending more than you're earning, you are still able to build wealth. Because there's a lot of people, it's possible for you to get a huge refund, but if you don't know what to do with it, it really hasn't benefited you in the long run. The whole goal is to be able to have enough money to put away towards passive activities. So whether it comes from refunds or increase in appreciation, whatever way that it comes, it's just knowing that your ultimate goal is wealth building. The reason why we're doing this is to make money, not lose money. So
yeah, and everybody, I want you guys to really pay attention to one of the main points that we talked about earlier, and that is not all CPAs are created equally. You have in this Wealth Building CPA, in Ebere Okoye, you have someone who knows your struggle, who deals with other companies who are working through your struggle, other real estate investors. So you got a specialized expert right here in front of you that knows your pain, that it's also a real estate investor. Now that alone is worth its weight in gold. So definitely I urge you guys to reach out to Ebere. There's a reason why we made her part of our team as one of our partners in our actual company. And I want you to have the same success that hundreds of other investors are having working with her. This is Charles Blair, the mad scientist, with
have the Wealth Building CPA.
And I want to thank you guys for tuning in, and we'll see you in the next interview of Guru Interviews. Bye.